Hi traders, welcome to this week ahead analysis with me, John. I'm going to take you through the FX markets this week after a very interesting trading week. So for the headlines this week, we've got an ECB that are forecast to cut rates by 60 basis points, bringing their rates to 3.65%. In the US, we have some CPI data, and CPI year on year is forecast to fall down to 2.6%, which is very interesting considering what we had on Friday, the NFP numbers and the revisions to those numbers, where we saw actually July's number come in, which was previously 114, drop down to 89,000 jobs, which was very, very interesting to see. So more fragility there in the labour market in the US. And then we've got some PPI data coming out towards the end of the week. Did that change anything to the CME Fed Watch Tour, though? Not really. So you can see that it's been pretty consistent the past week, 70% to 30% in terms of looking at the basis points move here, whether we're going to see a larger cut or not from the Fed. Currently sitting at 5.5% in the interest rates, and they're only expecting a 25 basis point drop coming in September so far. So yeah, interesting to see that dynamic hasn't really shifted. That being said, looking at the currency strength meter, the US dollar was the strongest currency of last week, had a nice little rebound, especially against the commodity-backed currencies. So currencies like the Australian dollar, the New Zealand dollar, even the likes of the Canadian dollar was a little bit stronger than last week. So managed to have a good little boost there in the US dollar last week. Going on to the US dollar index then. So what can we see? Well, we've just remained above that 101 handle now, that key weekly support zone that we've pointed out last week. We had a rebound here. We did break weekly highs, but price couldn't sustain any kind of bullishness above that level. But we are seeing increasing non-commercial longs coming into the US dollar at the moment. So still quite like the idea of being or potentially looking for a bit of a reversal situation there. Now I have put the volatility index here. So this is the VIX futures chart, and I've put this on just to show you that volatility is starting to increase again. Obviously, this was the madness that we saw on Monday, the 5th of August. And this is what we've seen last week. So we are starting to see another little build up here of volatility, which again is a causation of the market's fragility around the US dollar at the moment. Going on to Aussie US dollar then. So this could be a currency pair to watch this week if you are looking at the dynamics between the risk currencies and the risk off currencies. We've got this like head and shoulders pattern forming here, and a key level of support at 67.05 that's been breached last week. Could we see maybe price coming down towards the 0.66 handle? Going on to the S&P 500 then. So the S&P 500 had one of its worst performing weeks for the entire year last week, and that is something that is very significant within the market. So are we going to see more downside to the US stock market? Are we going to start to see that seasonal pattern play out as well, which is seasonally the stock market is very bearish in September? So we could see the compounding effect of aggressive cuts from the Federal Reserve and the seasonal pattern play to see prices push a little bit further to the downside there. So keep an eye on the markets this week. It's going to be a very interesting watch. Thank you for watching this video update. If you are new, please hit that subscribe button and like it if you thought the information was helpful. I'll speak to you soon.